Hello, my name's Annabel and welcome to the step-by-step tutorial video on how to use my Property Investor Deal Spreadsheet. This product has been highly requested by several customers and I'm really excited to be showing you how you can use this tool to present important information about a property deal to your clients in a simple and concise way. In essence, this spreadsheet has been designed to analyse property deals and present the key information to your investors. This includes buy-to-lets, flips and HMO deals. This spreadsheet compares finance options as well as different strategies. As well in this video, I'm going to be talking you through how you can use each section to create your completed investor tab. At the end, I will also show you some example scenarios to demonstrate how this works and how the investor tab can cater to several property strategies. In a way, this spreadsheet has a very similar layout and function to one of our best-selling products, the UK Property Investment Analysis Spreadsheet. A benefit of this tool, however, is that it also combines sections of the Refurbishment Spreadsheet and includes this as a separate tab. In a way, the Investor Deal tool is a combination of both products, which means you have all the key boxes and information you need all in one place. If you haven't already watched the tutorials for these two products, I'll include the links in the bio for you to take a look. If you've already purchased this product, feel free to open it up on your device while watching this tutorial. Equally, if you're watching to see if this product is right for you, then feel free to take notes and reach out to me directly on Etsy if you have any further questions. All the links to our listings will be displayed in the bio below. For this video, I'll be using the Google Sheets version. But please be aware you will also receive both a Google Sheets and a Microsoft Excel version with your purchase. When you first open the spreadsheet, I highly recommend you read everything in the Instructions tab first. However, as you are watching this video tutorial, I will be explaining the steps along the way. Please note that this tab contains instructions on how to unlock this spreadsheet further if you wish to play around with the formulas, but please do this at your own risk. If you are using the Google Sheets version, you'll notice a big instruction at the very top of the tab. You must go to File and Make a Copy in order to download and edit this spreadsheet. This is due to the fact that this is my master copy. Therefore, I cannot allow editor access to my customers, as then everyone would be using it at the exact same time. Remember to save your copy under the property address name and save it in a relevant folder. The first key tab in this spreadsheet is the Setup tab. Start by selecting the currency at the very top and then enter the full property address and location for the property that you are looking to present to your investors. When selecting the location, you'll be presented with 4 different options: England, Northern Ireland, Scotland and Wales. This cell is super important as depending on the location selected, the amount of tax that is calculated in the next tab will differ. Please remember that the land tax is auto-generated depending on which region is selected and will be calculated for additional or high rate properties. This is because this will be an investment purchase, not a residential home. Once you've completed these 3 cells, we'll move on to the Financials tab. The Financials tab is where most of your calculations will take place. It's divided into 5 main sections: purchase method, upfront costs, refurbishment, refinancing and strategy. As a rule, fill in this tab from top to bottom and only edit the cells highlighted in orange. Start by selecting how your investors plan on purchasing the property from the drop-down menu. You can select from cash, mortgage or bridging finance, a type of short-term loan. Once selected, you will see the relevant cells underneath turn orange. These are the cells you need to fill in for selecting this purchase method. Notice how the relevant orange cells will appear as you select other options from the drop-down menu. Once you've selected an option, enter the potential purchase price underneath and then add the loan to value or loan to purchase, the interest rate and the number of terms you'll be borrowing for. You may be wondering why bridging finance says loan to value and the mortgage says loan to purchase. It's because bridging loans work slightly differently from mortgages. Bridging companies give you a loan based on what they believe the property is worth, as opposed to how much you paid for it. Therefore, this affects the deposit amount, as your investors may be expected to use more of their own cash if the loan doesn't quite cover this. If the bridging loan is the same as the purchase price, then just enter the purchase price into the loan to value cell. Next, we look at the column to the right, purchase costs. This section automatically calculates the deposit based on the loan to value or loan to purchase and the land tax, as mentioned earlier. The tax brackets can also be explained in the glossary tab if you want to find out how much they'll be charged. You also have plenty of room to add any other upfront expenses, such as auction fees, bridging finance fees, architect costs, a HMO licence, sourcing fees, and any other legal expenses. The total purchase costs will be displayed at the bottom. Next, let's take a look at the refurbishment section. This is partially divided into two main sections. The first half looks at the total refurbishment costs, and the other looks at the total bills across the project. Unlike the property investment analysis spreadsheet mentioned at the start, this cell is automatically calculated via the Refurbishment tab, which we'll take a look at now. The Refurbishment tab is here to break down the different tasks involved in the project. As a rule, fill in this tab from top to bottom and only edit the cells highlighted in orange. Start by entering the task on the far left and the area of the property where the work will take place. For example, adding new carpets in the master bedroom. For each task, try to provide as much detail about it as possible. Also feel free to add this further information in the notes column to the right. Once you've entered a task, enter the estimated cost in the column to the right. Fill out as many columns as you can for each task required. In this table, there are 100 rows to allow up to 100 tasks for the project. If the project requires more than this, please do get in touch so I can customise the size for you. Or if you're a spreadsheet wizard, feel free to edit yourself by dragging the columns down and adjusting the Excel formulas. But please do this at your own risk. Now we've completed this tab, you will notice a total sum at the very top of the tab, based on the total of the estimated cost column. Let's head back to the Financials tab to see this figure appear. Now we can see the figure at the top, let's continue the rest of this section. Based on the total refurbishment cost, you can now add a value for contingency costs, as well as a figure for a project manager, if you wish to add this in. There are also a few spaces to add your own costs. My suggestions include warranty, landscaping, drawdown surveys, as well as costs for furnishings, photography and staging. Once you have determined the refurbishment figure, you need to enter the estimated length of the refurbishment. In other words, how many months will it take for the project to be completed? If the plan is to sell this property later for profit, I recommend also including the time it might take to sell the property, as your investor will have to pay the monthly bills and other expenses until they sell it. If you do not think the property needs refurbishing, then just enter the number 1 into this cell. Under the total bills during refurbishment section, add the estimated bills for the entirety of the refurb and or selling period. There is room to add your own costs for council tax, water, electricity and gas, as well as 2 extra spaces. Other example bills could include ground rent and service charges. Depending on the purchase method and how long the refurb will take, the spreadsheet will then calculate how much is expected to pay in terms of the total mortgage or total bridging finance payments. If cash has been selected at the start as the purchase method, then this cell will be blank. Remember, these are the total bills during the entire refurb and or selling period, not just the bill for 1 month. Next, scroll across to the refinancing section. Note this section is completely optional and may not apply to all strategies. If you think it is best not to refinance the property, then leave this section blank and move on to the strategy sections below. If refinancing, or in other words remortgaging, Then go ahead and select which type of mortgage you think is best. If you're unsure, please speak with a mortgage broker who'll be able to advise. Then fill in the details, including the refinance value, the loan to value, the interest rate per month, and the length of terms in months. The spreadsheet will then calculate the new mortgage amount and tell you how much should be left in the deal, based on paying back any other loans the investor may have taken out, for example, bridging finance or a mortgage. If there is money left in the deal, the cell will turn red and display a negative figure. However, if by remortgaging the investor pulls out their money and more, the cell will turn yellow, indicating a positive figure and cash surplus. Lastly, scroll down to view the final section of this tab, Strategy. This section is broken down into two halves. First, start by selecting the strategy you want to analyse from the drop-down menu at the top. Choose from Sell or Rent. In other words, do you think it is more profitable for the investor to sell this property for a lump sum or hold it in their rental portfolio? If you are unsure at this point, do not fret. I suggest picking one and then seeing what the returns look like. If you change your mind, you can always select the other option and complete the numbers. If you think selling is the best strategy for this property, then select Sell from the drop-down menu and fill in the highlighted orange cells that appear underneath. Under Sold Price, this is the total sale price you believe the investor will be able to achieve once the property has been refurbished or modernised. If you believe it is best to sell the property into individual flats or units, there is room to add up to 10 units. Make sure to allocate a figure for each unit you plan on selling. To work out the possible sold price, head over to Rightmove and go to Sold House Prices and search for similar sized properties within the property deal location in a similar condition. Make sure the comparables are the most recent and within, ideally, a quarter mile of the property to obtain the truest value. Then enter all the information you find into the Research tab. The Research tab will gather all the data and return an average sales value at the very bottom. Feel free to use this average sold price figure in the sold price section. Next, head over to Selling Costs. Here the spreadsheet will calculate how much is expected to be paid back once the investor has sold the property. This is broken down into any mortgages or bridging finance loans that have been taken out, including the payback of any interest. You'll also find space to add conveyancing and or estate agent fees, alongside a few sales for your own expenses. More examples could include early repayment charges, bridging finance fees, and any other legal expenses necessary for the deal. The spreadsheet will then take the potential sold price, minus the total selling costs and any of the investor's own capital put into the deal, and return the figure in the profit on sale cell under metrics. Here you'll see the return on investment based on the profit, as well as the 10 and 20% stress tests. Stress tests are important because you might not always get the price you predicted when you sell. This can happen for several reasons, and it's always best to be aware of the worst case scenario in case the deal falls through or market prices dramatically change. Similarly, this helps the potential investor understand the risks of purchasing this deal and help to create a plan B. If you think it is financially more beneficial to rent the property to generate income, then select the option Rent from the drop-down menu and fill in the highlighted orange cells that appear underneath. Similarly to the sold price section above, the rental income column looks at the rental figures or singular figure you believe the investor will be able to achieve once the property has been refurbished or modernised. You have the option to insert figures of up to 16 rooms or sections of the property. However, this will depend on the type it may become. So, for example, a HMO or a block of individually rented flats. You may want to add data to all of these rows, or just insert a singular figure in row 1 if you think it is best to rent the entire property. In other words, a single let. To work out the possible rental income the investor could achieve, again, head over to Rightmove or Spare Room to find comparable rentals that are similar to the property in terms of condition, size, and location. Make sure the comparables are the most recent and within, again, a quarter mile of the property to obtain the truest value. Then enter all the information you find into the Research tab. The Research tab will again gather all the data and return an average asking rent at the very bottom. Feel free to use this average asking rent figure in the rental income cells and adjust the prices based on the size and condition of the rooms. Lastly, head over to the rental expenses section. This is where you can add all the monthly expenses the investor will be expected to pay while renting out this property. This includes electricity, insurance, water, cleaner, broadband, and any other expenses they may need to pay. For example, ground rent and service charges. You can also set a value for a lettings agent fee, a value for maintenance costs, as well as any vacancy or void periods. If the tenants will be paying for their own bills, then only fill in the rows that the investor will be paying for. Once inputted, the metrics on the right will appear, depending on which strategy information you've provided. We'll also be able to view this in the Investor tab. I'll show you this in just a second. Now that we've looked through the Financials tab, let's quickly walk you through the Research tab. As I touched upon briefly earlier, the Research tab can be used to hold comparable data about the property, including sold price comparables and rental comparables. This tab will be primarily used to compare prices, which can subsequently be used in the sold price section and the rental income section in the Financials tab. However, there is also room to add other useful information, such as the distance away from the property in miles, the total size of the property in square metres, and the number of beds and bathrooms it has, as well as its condition. Even though these cells are optional, you may find this tab useful to deepen your research. Once you've entered all the information needed from the Financials, Refurbishment, and Research tabs, you'll be presented with a beautiful display of the key information on the property in the Investor Deal tab. You have the option to add a photo of the property, as well as add your own contact details at the bottom. That way, investors will know who to contact to ask for more information, and they may want to visit the site. On the right, a simple pie graph with a breakdown of the capital required will appear. This is shown to help investors understand where most of their capital will be going and what loans they will need to take out. Feel free to take a screenshot or export this page so it can easily be sent and presented to your group of investors. Now that we've discussed how to fill in the spreadsheet, I'm going to show you a couple of example deals that you could present to your investors. In this first example, we present a fictional property for sale to generate rental income. We have the address on the top left, including the UK region the property is in, alongside a picture of the property underneath. In the middle, we can see a cost breakdown with the purchase price of £150,000. When analysing the upfront expenses, the total capital required for this deal is around £64,000. This is the amount the investor is required to have to purchase and refurbish this deal. As a result, they could achieve potential net profits of up to nearly £10,000 a year, as well as a ROCE of 15%. The investor can also see the potential length of the project. So in this scenario, it's 6 months, as the property will need time to refurbish before being let out. Finally, we can see where the money for this project will be spent by looking at the pie chart on the right. In this case, just over half of the investor's money will be spent on upfront costs, whereas the other half will be spent on refurbishment. The yellow box at the bottom is there to add your name and contact details so investors know who to contact for more information. In this second example scenario, we are presenting another very fictional property for sale that has the potential to generate a profit via a development. For this deal, the investor will need £94,000 to renovate and purchase the property to start with. Over 12 months of refurbishment, they should be able to sell the property at a figure of around £187,000 and generate a healthy lump sum of £33,375 once the mortgage has been refinanced. If this figure is achieved upon sale and the budget for the refurbishment doesn't go over, this has the potential to generate a generous return on investment of around 35%. With this deal, you can also see how much money will be left in the deal, in this case circa £12,000, unless you can refinance at a higher valuation and pull your money out. In other words, an infinite return on investment. Again, both examples are fictional, as the figures are used to demonstrate what type of deals you can present to your investors. As you've just witnessed, you can see how you can use this spreadsheet to present your investors with a range of scenarios and strategies for a potential property purchase. The great thing about it is you only need to add the numbers once. So for example, if you decide to change the purchase method, simply select another option from the drop-down menu and add the information to the relevant highlighted boxes. Similar with the strategy, you do not have to delete all the figures. Just enter them into the opposing section. That way you can easily compare the metric boxes and see which strategy yields a greater return on your investors' money. Remember, this spreadsheet is to be used as a tool to create presentable information to your clients. These figures are to be used as a guide for the property deal, as there are many other factors at play when deciding whether a deal is worth pursuing. So for example, the location, the owner, the current tenants, and the history of the property. As always, please liaise with a mortgage broker to help decide which finance option would be best for you and your investors. If you have any questions about how to use this spreadsheet that I have missed in this video, please get in touch and let me know. Thank you for watching this tutorial. I hope you found this video helpful. Until next time.